the presentation for that, Dan. Sorry. If I tell everybody now, they may leave. I couldn't have that. I need the attention, as you know. Well, here's a good question. Do you think the markets have been up simply due to vaccine prospects? November was a fantastic month. You've talked me into it. We'll talk about the markets first, and then we'll get back to the economy. Let's just look at what the markets have done here in November. Just amazing. What caused this? Up 11% for large cap US stocks, up 18% for small caps. What is causing all of this positivity amongst traders? Really two things. Number one, there was some fear before the election that one party would be in control of all facets of government. That tends to be a negative. It swings too far to the right, it swings too far to the left, it brings uncertainty, it brings change. If you have a business plan that says, hey, these are the assumptions that are going into it, and suddenly you rip that off and something totally different happens, not good. So number one, that fear did not come to fruition from the market's standpoint. Instead, we have, I guess you'd call it a jump ball, if anything else. Yes, Mr. Biden won the presidency. In the Senate, looks like potentially it's either going to be a very slimmest of slim Democratic majority, or Republicans may control it. And then in the House, which was honestly the biggest surprise of all of this, is that the Democratic majority there looks like it's going to be razor thin. What does that mean? That means what moderates are left in both parties have a big say in what goes on, because you can only afford so many defections, and the market goes, hey, that's a really good thing. The second piece of that, and which was kind of alluded to in the question that Bill sent me, is the vaccine. Anything, they kind of set the expectation, hey, if we get anything that's 60% effective, we'll consider that a win and we'll start rolling it out. All three vaccines that have gone through testing at this point, all three vaccines have come back at theoretically 90 to 95% efficacy. Now, there are some challenges in the distribution for some of them requiring cold temperatures. Others seem to be more effective in older individuals. Again, they don't know why. One of them, in the test, they accidentally gave half doses first and then a full dose. And that turned out to be more effective than 2 full doses that are weeks apart. They don't know why. So a lot of this is we don't know why. But yes, markets are very optimistic that the vaccine is the turnkey that absolutely revs the economic engine again. It releases all sorts of pent-up demand for travel, goods, entertainment. People have been, you may have noticed this, people are itching to get out of their house. So the markets are anticipating that they will spend money when they are allowed to. That has resulted in November, record returns. This 18.4% in November for the Russell 2000, never been done before in the history of the market. That's what kind of upside a stalemate election and a vaccine will give you. Over the last 6 months, things have been positive, not to the same degree, obviously, particularly for bonds, which are up 1.8%. We're going to have to get used to that. Bonds are not going to be offering much return going forward. On a 12-month basis, certainly large cap, small cap US. And think of this, 12 months ago, beginning of December, we knew there was maybe something going on in China. That's all we knew. We did not know, how rapidly it would spread, how widespread it would be. If I could tell you December 1st last year that, hey, there's a global pandemic coming that is going to ravage the country and we're voluntarily going to shut down the world economy. Oh, and by the way, the stock market is going to be up 17% over that time period, you would have laughed at me. But yet here we are today with that very event unfolding. That's why predicting the markets, very, very challenging, because it is the unexpected that typically occurs. Just looking at our style boxes over the last 12 months, you can see that over the last 3 months, value has tried to rally a comeback. So value has been absolutely underperforming relative to growth for several years now, call it even 10 years. Over the last 3 months, we've seen kind of a resurgent interest in traders in those dividend paying stocks. Growth has come back strong. In November, it was worse than this. And you can see over the last 12 months, growth has absolutely trounced value. So these are your technology companies. Zoom, maybe you've heard of it. Maybe you've heard of Tesla, that little gem that's going to be added to the S&P 500 later this month at sky-high prices, I might add. It suddenly becomes the 5th largest company in the S&P 500 overnight. Amazing. Worth more than Berkshire Hathaway, which has been around for a lot longer. And then if we look on a 10-year basis, still looking at returns, 14% on the S&P, 11% small cap, 5% international. If we think there is an opportunity set on a going forward basis, and again, it may not be immediate, but in a going forward basis over the next 8 years, international probably has more upside potential than either of these two because it's underperformed our expectations for the last 10 years. Kind of betting on the underdog, if you will. All right, I'm just going to check my chat here and see how we are doing there. Question on Social Security. I will get back to that in the economics. Of course, I've kind of gone off on a tangent here. As we look at our market mood meter, on how have traders been feeling? And again, I kind of view the market as a 2-year-old. It will throw tantrums. You can see this is a very big tantrum here back in March, where we began the year, hey, what could go wrong? Things are great, to the world is falling apart, to things are looking up, economy is bouncing back, to election jitters, to a little bit of a celebration, if you will, in November. We will have to see how December goes. December, typically a fairly optimistic month. People tend to be in a good mood. Traders tend to be in a good mood, and strangely that turns into trending up stock prices. Let's check on last things. All right, just going to focus here for a second, then I'm going to take this away and see if there's any other questions. Market mood here, we looked at corporate earnings. Surprisingly resilient would be the phrase that I would use. You would think and again, kind of depends on industry. You look at airline, travel, restaurant, hotel, poor Marcus Corporation, oh my. You look at all of those and you go decimated. But there are other companies that are doing just as well, if not better. Zoom, for example, in this environment than in the pre-COVID environment. So a lot of company earnings much higher than analysts have been thinking because they've been able to offset costs, reduce costs, and still protect their margins. We talked about small caps. Their first record high in over 2 years struck in November when it's just surged 18%. That tends to indicate traders are believing we are in the beginning stages of that economic recovery. Honestly, if I look at where markets are right now, I'm not real enthused. I think things are fairly fully priced. I think expectations for vaccine and recovery and all that are fully priced into the market at this point. With continued upside surprises and earnings, that may continue. But right now, I'm not jumping down excited about stock prices like I was in March, when you can ask anyone in the office here. I was very, very happy in March that we had that opportunity to buy stocks at lower prices. Question here from the chat: what options do you look at versus bonds going forward in the next 3 to 5 years? We are actually looking at decreasing our bond allocation. So why do we have bonds in the portfolio? Bond in the portfolio is A, create income, B, provide some downside protection when the stock market falls apart. And we know it will do that again, we just don't know when. So now we have half a reason to have bonds in the portfolio, because income, there isn't a lot of it. Your 10-year treasury is down at 0.84%. That is not much. Now, granted, relative to Germany, where the 30-year bond is like negative 0.5%, 0.84 is a steal. But still, we can't expect a ton of return out of that. So we are evaluating trimming back bonds in portfolios and then adding to alternative investments that are, again, not going to act like the stock market or the bond market, but also may have some income attached to them, trying to eke out more than 1% to 2% over the next few years. Again, we'll have to see what changes. We're actually in the process of evaluating that right now for implementation in January. All right. Value of the dollar. That is definitely a trend to watch. US dollar has just fallen in value as we've racked up more and more debt, as the COVID has spread across our country and hit our country harder than some, not all, mind you. Our currency has taken a hit. That is good for international investments, because any returns you get to convert back into dollars, you get more dollars. If they're worth less, you get more of them, and that helps returns. We will have to see if that trend continues. I suspect a weaker dollar is in the works. And I'll go into that a little bit more in a second. LPL Research key point, and they wrote this on the 30th. Although we remain long-term bullish on equities, there are some signs that sentiment could be getting a little frothy at the moment, which could increase the odds of a pullback. Again, if it wasn't December, I'd say a pullback is likely. Because it's December and people tend to be in a good mood, not quite as likely as normal. Which, you know, if I was a betting man, and I'm not, I would say we're probably looking at a January pullback. Would not surprise me in the least. But again, I have no control over that, and I have no prognostic capabilities whatsoever. So take that for what it's worth. Just going to check the chat here a second, see if we have any other questions that came in on the markets. Otherwise, I'm going to migrate off. Oh, where will the market be at year-end 2021? I'm going to be very honest with you. I do not know. If it is roughly where we're at today, that means vaccine has worked. Things are back to normal, because I think those are the expectations that are built into the market. If it is up, that means things went better than planned. The vaccine received wider distribution earlier in the year, and the path to normal is strong and building. Also means that the Fed probably didn't raise rates, means that money is still cheap, so risk assets can continue to climb in value. If we end up below where we're at right now at the end of next year, probably means the vaccine rollout did not go very well, or there was less pent-up demand than the markets are expecting for goods and services. Or the vaccines prove ineffective. That would also be another one that would take us down another notch. All right, I'm going to bump up to the economic part now. We don't really do that first, but we're just going out of order today. That's okay. By the way, that's just fine. I'm just going to go to the chat here and see if there are any economic questions before. So I'm just going to stop sharing that so we can see people again, right? We need to socialize more so you can see people. Let's see. Social Security running out of money. That's kind of economic. We'll throw that in there. True. Social Security, and again, we'll get the trustees report likely in February or March of next year. Anticipated that somewhere around 2026, that Social Security will have roughly 75% of the money it needs to pay benefits. So 2026 used to be a long time ago, like around 2000. When they were told it was like 2032, it's now 2026, and nobody has done anything about it yet. So what does that mean? You probably will have a combination of tax increases and benefit cuts heading your way sometime in the next 6 years. Can't tell you what they look like. Mr. Biden's proposal on the campaign trail was, hey, we're going to start applying those self-employment and FICA taxes on anything over 400,000, kind of leaving a donut hole between 120 and 400 where you don't pay them, but have those higher earners kick in more money to Social Security. That's unlikely to make it through Congress, given its makeup at this point. But I'm sure there's going to be other ideas floated over the next few years to try and resolve this. As you remember, back in the 1980s, it took the threat of not sending out checks before they actually did something. I have not seen the inclination of politicians to accelerate their work on this matter. That's a nice way of saying they're a bunch of lazy bums and they're not doing their job. Social Security got that. Implication of new president on finances. So I can break that into a two-part question. We have personal finances, and then we have USA finances, shall we? Personal finances, probably not much, given the fact that you can't ram tax increases through Congress. It just can't be done with the makeup that it has. If anything, and this is part of what the markets were celebrating, it's going to be status quo. Right now, the current law is in place through 2025, and 2026, there are tax increases scheduled if they don't do anything. At least through 2022, it doesn't appear that you're going to get much of anything in tax legislation through Congress. From a, from our country standpoint, well, what does a Biden presidency do for the national debt or the deficit? I go with status quo. I mean, if you look at the deficits that Trump ran up, if Biden does more than that, I'd be surprised. So if anything, I expect deficits to go down under a Biden administration. I know that sounds very strange, but that's the way it's playing out. And part of that is because Congress threw $3 trillion at the economy in March this year. That's a lot of money that we didn't have and still don't have. All right, another question for you. Do you anticipate Biden turning around the payroll tax halt for the last few months, despite it not getting cooperation from all businesses? If I was in Mr. Biden's shoes, I would just let that thing peter out and go away and not even mention it, honestly. It's been fairly ineffective. It's an administrative nightmare. You're setting yourselves up for having people angry at you next year. I would just let that die if I were Mr. Biden and not even mention it. Pretend it doesn't exist. Because for most people, it doesn't. All right. Well, we're out of questions on the chat line, so I'm going to have to go back to my boring prepared remarks. I apologize in advance. Let's get there on the share. All right. Good news, unemployment. 14.7% in April, just under 7% in October. We should get the November numbers later this week. And kind of apprehensive about those numbers, actually. Given the resurgence we saw in November on, people in quarantine, economy shutting down. You heard about all these restrictions that various counties and cities and states put in place. It's very possible we could see a tick up in the unemployment rate in November. However, the markets are looking past that. I don't think it would surprise them. They are looking past that and going, hey, that's nice, but guess what landed at O'Hare last week? And we're starting that process. Guess what's getting stored in Pleasant Prairie? That's right, your vaccine, your Pfizer vaccine is being stored in Pleasant Prairie right now. The first shipment into the US went to Pleasant Prairie for storage. So wouldn't surprise us if it ticked up a bit. Would surprise me if it went down, just based on what we saw in November. All right, I have never seen a Fed chairman grovel and beg and plead so much for Congress to spend money. Chairman Powell is doing absolutely everything he can. He's pushing all the buttons he can to say, hey, I'm doing my part. You need to do your part, and you need to be spending money. Just today, there was another bipartisan bill introduced in the Senate for about $1 billion. Seems about the right price level where things are going to get the deal done, if you will. Probably less spending and less aid to state and local governments than Democrats would prefer. probably more money than Republicans would care to spend after approving $3 trillion earlier this year. So looks like it's going to be about $1 trillion bill. McConnell came out today, said, you know what, there's absolutely no reason that we can't get something done before we leave town on December 21st. Let's get moving. And really, Democrats have less control over the House next year, so they should be more inclined to take a deal that they can get now as opposed to waiting, because it's going to be tougher for them to get what they want next year, honestly. Again, that's part of the beauty of a tied Congress. All right, let's see if I got anything on the chat line on that. How much can we go in debt before going bust? What dictates that? Great question. It's sort of like diving in a pool where you can't see the bottom and you won't know it until you hit it. Japan, if you look at percentage of GDP, Japan is in a much deeper hole than we are, except most of their debt is held by the residents of their country. What's going to determine how much debt we can go into before going bust is when people look at the United States and go, that is a bad credit. I may not get my money back. When traders start going, I don't think so, that's when interest rates start to go up. When interest rates start to go up because people think there's a risk they're not going to get paid back, then it starts costing more out of our budget every year to service that debt. And since we're spending beyond our means, that only adds to the deficit and accelerates, sort of like getting into credit card debt, right? You can make the minimum payment, but you're not making a dent. You make less than that, oh my goodness, it just keeps going up and up and up. We won't know what our limit is until it's too late. And I know that's not very encouraging words. I would say we're probably not close to it at this point. I would say the farther you stay away from it, the better off you are, but I'm in a minority at this point. Hope that answers your question, Bill. If you have a follow-up, just type it in. I'm looking at them as fast as I can. All right, now we're going to try some new technology. Whew, I have never done this before, so hey, bang with me. I got a question for you. When you may resume which activity will you consider your post-pandemic life normal? I'm actually going to send out a poll at this point, and I'm going to let you select your answer anonymously. I won't know who answered what, but I've got 51 people on this Zoom, and you can go ahead and vote, read through them, and then I'll share the results with you once we have everybody who's voted. Yes, you get to vote again. Isn't it exciting? It's 2020. You may not vote twice, though. And you must be a resident of this Zoom to vote here. All right, we got 39, 40 of you have voted. You know, they should use this for the election. It goes a lot faster. %96 of the vote is in. And that's where we're going to leave it. So if you're still reading, I'm sorry, I'm going to end the polling and share the results. Here's the results. This should be appearing on your screen. Our number one answer, not wearing a mask in public, will be the first activity that tells you things are back to normal, followed quickly by seeing a family in person at will. Seeing a family person at will, going to a restaurant, and taking a trip are all tied exactly at 11 apiece. Interesting. Nobody has kids back at school. Boy, I must have written this poll or something, because my kids, I finally have 3 back in school on Monday. Had 2 at home there for a while. Going to a movie theater. Okay, interesting. All right. All right, what COVID adjustments do you see becoming permanent for employees and employers? I don't have a poll for this. I was going to leave this free form and see what you type in the chat and kind of get a flavor for how you see this changing employee-employer relationships. For those who are retired, this may not be as applicable a poll, although maybe you can project from your kids. For those who are employed, I'm interested in your insights as to how things are going to change. So Let's see what you guys come up with. I'm just going to read them off as they come in here. Less permanent office space, more remote work. I think we definitely are going to see that. Kind of to make a parallel here between Uber and working from home. Okay, kind of a stretch, but bear with me here. So Uber, essentially, you have people who own vehicles, maintain vehicles, pay for the gas, pay for the car, and then others who don't want to do that, so they catch a ride, right? Think of this from an employer-employee relationship. You have an employee who owns a home, pays to heat it, has lighting, electricity, cable, internet, all that stuff. And all of a sudden, companies go, hey, this employee actually might be happier working in that environment, and we can shave office space. So kind of a weird parallel, but one that I don't think is too far of a stretch, where we're seeing the internet displace ownership or community space in favor of individuals. Let's see, you're just going to see more remote work, open opportunities across the country as more companies will support more remote work. Great point there, Damien. If IAG wants to hire someone, are we now limited to the southeastern Wisconsin area? If we know we have a real talent, or let's say one of our employees moves, his wife takes a job else, someplace else. Can we keep that employee? We probably can at this point. Definitely a change there. More meetings via Zoom. Boy, do we know that, huh? I'd be willing to take a pay cut if allowed to stay at home. Now, see, the companies would love that, because not only would they cut your pay, but they would have less overhead. That's a double win, and you wonder how profit margins can be maintained. Crowds at concerts, sporting events, slow to come back. Absolutely. What is it going to take to get into a concert? Do you have to show them the little hole in your shoulder, or 2 holes in your shoulder where you got your shots? What does that take? Fewer business trips, not necessary anymore. Bad for airlines, bad for hotels. If Biden's business tax at 28%, oh, that's not an adjustment. But let's pivot to that as long as it's on the mind. 28% corporate tax. Number one, very unlikely to be passed. Number two, still better than it was, but does leave us at a competitive disadvantage on a worldwide basis. So I would not see it as a positive, and neither would the markets. Oh boy, we're just going off on tangents all over the place. I hope you're keeping up with me. Next question for you, and maybe this has been answered by some of you already, but what COVID adjustments do you see becoming permanent for consumers, i.e. you? How has your life changed permanently because of COVID? Something you're not going to go back and do when things get normal again. All right, shop online more, remote service calls and diagnosis. So doing things remotely instead of having people in your home or in your business. Less overall purchases. Oh, the retailers are not going to be happy to hear that. Grocery delivery, something I have never tried, but has really taken off. Let me ask you this. So many more stores are offering curbside pickup at this point, where you don't need to go into the store. You pull up, you dial the number, you tell them what parking spot you're in. Any of you use that or will continue to use that so you don't have to go inside and go through everything? Ramifications of a different virus, video doctors to doctor visits, new attitude towards science and global warming, fewer in-person meetings, someone using that pickup all the time, glad it is working for you. I mean, it's got to save time, particularly if you're kids. I'm thinking if I'm a mom and I can go and dial up a number and have people put things in my cars instead of taking 3, 5 and under children in a store, I'm there. I don't think that's going away. I think that's permanent. And why didn't we think of that before? Looking forward to traveling. Restaurant meals, curbside pickup. Refuse to embrace the new normal of too much Big Brother. So that is an interesting statement. Small group travel, probably going to be, the smaller the group, the less the odds of something going on. All right. All right, my next question for you, and this is going to be a poll question, so think about it. Which group should be third in line to receive the vaccine after healthcare and emergency workers, who are, I think, number one, and vulnerable populations, which are probably number two? I'm going to share a poll with you. All right, I've got to find my second poll. Poll number 2. All right, I'm launching the polling. Here we go. Is it anyone who wants it? Retail restaurant employees, office employees, teachers, children, urban populations, or rural populations? We have 28% of the vote in. It's like election night all over again. How exciting. 65% reporting. 83% of the vote is in. We've lost one voter, apparently, who has left us, so no longer on the rolls. We are down to 49 people on the Zoom. All right, we have 95% voted, so I'm going to end the polling, and I'll share with you what we have. Number one answer is teachers as number 3, followed closely by anyone who wants it, so kind of a free-for-all approach. Nobody wants office employees. Thanks, guys. And some favor urban over rural. Interesting. Children got 1 vote. Any comments on that? Got 1 comment. Some people will not want it. That is true. The fascinating thing to me is when you think of what it takes to get back to normal, it is a combination of events. It is, number one, everybody who wants the vaccine or believes they need it in order to go out and be exposed to COVID needs to have it. And number 2, the individuals who don't care, and they are out there, don't care and don't want to do anything, don't want the vaccine, they are given the freedom to go out and do whatever they want. Some of them are doing that already, obviously, but have social acceptance of going out and doing whatever they want and not wearing the mask. So when you have those 2 groups that are on very different ends come together, when there's this bunching in the middle, this critical mass, that's when you start to see things turn, in my opinion. All right. Military. Hey, that's a good question. I should have thrown that on the poll. How did China recover without a vaccine? Great question. So China essentially used mass quarantines, mass forced quarantines, along with tactics that would not work in the US, let's put it that way, in terms of forcibly isolating people. They had vans driving down the streets and taking people's temperature, and if you were above, you went in the van and you were off and isolated. It is much easier to stomp out a virus when you have that level of control over people. I think one of the greatest challenges in the United States is we are not used to being told what to do. And we actually like not being told what to do, and we may even treasure not being told what to do. So a lot of the things that the government tried to do received pushback by a certain percent of the population. I think that's part of the reason China was so effective in stomping this out, and we didn't do such a good job. Bahamas, Australia, and New Zealand, also much smaller populations and only accessible via air. So much easier to control the virus in those environments than someplace that's connected to Canada, Mexico, and honestly is the most thriving economy in the world. We have people traveling everywhere all the time to and from our country. Much easier to do when you're on an island, I guess, is the lesson of that. So if you're going to retire, retire on an island. Very good, a valuable lesson today. LPL research, key point, even without new lockdowns, it appears that consumer behavior has already begun to react to the rise in cases. Again, this was on November 23rd, presenting a risk to economic activity, regardless of any policy decisions to curb activity. I'm debating whether I want to share another screen with you. I think I will, just for fun, if for no other reason. So as I track COVID, and again, every morning I come in, what's the first thing I do? I pop up on my screen 3 different websites that I use to go, hey, where are we as a country, and particularly in Wisconsin? So I'm going to share those with you just so you can take a look at what I am looking at. Here we go. That's not it. All right, Zoom. Let's try that again. Apologize for that. I'm going to have to drag this over here, I think. The problem with having 3 screens is Zoom gets confused as to which screen I'm actually pointing at. So let's try that again. Happiness. All right, so this is globaleconomics.org. It is Johns Hopkins University. And it's a picture of the United States. Everything that's green has a very low incidence, almost no incidence of COVID. So right now, Slope County, North Dakota, 0 reported cases over the last 7 days. Go to Wisconsin and things get a little dicier. I'm going to try and zoom in Wisconsin. Give me a second here. This works a little different when you have it on Zoom. You should recognize this state. I know there are some people from Iowa here, but we'll look at Wisconsin because we're kind of Wisconsin centric. Let's look at Waukesha County. We have 89 new cases over 100,000 people. That's actually down. Dane County, 64. Where I live, Jefferson County, 85. So Milwaukee, 100, all red. So looking at that, you go, oh, that's not very good. And it isn't. However, if we look at the effective reproductive rate, and this is rt.live, you can see our spread is slowing drastically. So if our spread is below 1, if our R0 or RT is below 1, that means one person is infecting less than one person. If this is higher than 1, that means one person is infecting more than one person. So we're at about 0.95. If we look at Wisconsin specifically, actually, let's click on that. You can see we've gone through ebbs and flows and ebbs and flows, and then we weren't so good. And then they estimate the number of active infections in the population. You can see, kind of on a positive note, we've kind of bent the curve over the last week or so, where we are starting to trend in the right direction. There are certainly other states that are not trending in the right direction, but Wisconsin kind of has turned the corner. I wouldn't call us out of the woods by any stretch of the imagination. But we are heading in the right direction. And it also has other states on here, so you can see states that are doing well, states that aren't. Last one I looked, oh, you know what? The first one is actually from Harvard. That was my mistake, globaleconomics.org. This is Johns Hopkins, obviously. And once again, kind of shows that for Wisconsin, things are trending in the right direction. So, hey, way to go, people. We're starting to pull this off in terms of bending the curve, if you don't mind me using language from March. All right, we can stop sharing that. I think I'm all COVIDed out. I didn't want to make this a COVID conversation because that's really boring. All right. We're going to migrate on to our special topic for today, which is, what's going on in the markets theoretically in 2021. For those of you who are longtime power break attenders, been doing this for Holy cow. How long have we been doing tower breaks? It's got to be about 15 years now. You know, we like to use LPL's Outlook 2021. For those of you who haven't noticed, it's December 1st today. And apparently they don't get it out on December 1st because that's too early. So I had to pick from other material. So I went scrambling on Wednesday last week when it appeared I would have to find something else. And we'll be using the materials from Goldman Sachs instead. I just kind of found a nice summary of their thoughts that we can at least use for topics for conversation, even if we're not fully on board with their thought process. So let me pull that up here. Here we go. All right. As usual, I've highlighted some things in yellow that I want to draw our attention to. If you have other questions, my poll results are blocking me, I'm told. Hold on. How's that? That should be better for you. That means all those nice COVID charts that I was showing you were blocked by that poll. Okay, this is what happens when you do things for the first time, and I have learned something today, which means it's a good day. Always close your poll before you share again. All right, from a big picture standpoint, $1 trillion stimulus package likely. We've kind of talked about that already. My gut says they can get it done. Keep in mind, they also have to find the government, which expires on December 11th. For those of you keeping count, that's in 10 days. They were supposed to have a budget in place on October 1st. Didn't quite make that deadline. So right now, the government is funded through December 11th. If Congress doesn't pass either a full year budget or what's called a continuing resolution to give them another window to get things tidied up, if they don't pass one by December 11th, we have a government shutdown. Kind of the wild card in that is you have a president, a current president who's not very happy. So we'll see if he has any shenanigans up his sleeve when it comes to those negotiations. Tough to tell at this point. He may be willing to trade votes for dollars. We'll have to see. Global growth outlook. For as negative as 2020 was, 2021 is seen as a positive, right? Everybody wants to say goodbye to 2020 and good riddance. Given the amount of downward pressure on economic activity in 2020, we're expecting a snapback in 2021. Probably global growth, they're expecting 6%, which is probably a little high, but they're pretty enthusiastic about what can be done coming out of this, particularly if the vaccine is effective, is accepted, and is widely distributed. Current weakness, much stronger growth when Europe ends its lockdown. Obviously, it's hard to have growth during a lockdown, but that's going to be very good news for Europe to have vaccine distribution ready to roll. Developed market central banks, probably not looking at an inflation threat in the near future. We have unemployment that at 6.9% doesn't tend to lead to inflation. We have, while we've threw $3 trillion into the economy and racked up the debt, we are not seeing all of that money hit circulation and hit the economy, which means we have no traction for inflation at this point. That's not to say we haven't set the stage for it down the road. We just don't see it, at least not in the next 6 months. All right, I'm just going to check my charts, my chat here, see if anybody has any questions. Seeing nothing, I'm going to move along there. We've kind of talked about the benefits divided government. Hold on, I got to move something here. It's blocking my view now. There we go. Now I can see. Here's a great phrase for you. It's still mostly about the virus. And that it is. I mean, that is what's going to determine GDP. Once people are free to go out, free to spend, free to travel, free to not wear masks, free to do what they want, it's kind of difficult to tell how much pent-up demand there is. We have probably in the hundreds of clients who were supposed to take trips this year, never happened. All of them, almost all of them, are interested in rebooking in 2021, or at least looking at it. If we look at real GDP growth, year-over-year change, you can see 2019 on a global basis, 3%. 2020 consensus, and I'm going to focus on the consensus numbers here, which is, a broad survey of economists, which leads you to averages. Probably a 4% dip. So if you grew 3 in 2019 and you dropped 4 today, you're roughly back where you started, a little less. 2021, looking to recover that 5.2, and then moderating economic recovery after that. Again, Goldman Sachs is a little more optimistic. I'm not sure I share their optimism, honestly. Probably closer to consensus, unless things go much better than the markets are anticipating at this point. All right, I got a comment on the chat line. Government needs to put policy infrastructure in place to minimize human life economic impact from next pandemic that will happen in years to come. The fascinating part of that is just doing some reading on this. We did have a recent president that was absolutely, obsessed is probably too big a word, but saw this as a threat and actually drove preparations to the point of stockpiling, to the point of situation planning, scenario playing, all those kind of things. The fact of the matter is, and that was George W. Bush, the fact of the matter is the ensuing presidents just kind of completely ignored his work. Both Obama and Trump just kind of didn't care as much about it as he did. So if we only could have had the pandemic back around 2003, we honestly may have been better prepared. Maybe not with science and technology, but at least physically prepared for the pandemic. All right. I'm just going to read that. One important assumption underlying our forecast is that governments in countries hard hit by coronavirus infections will continue to do a reasonable job replacing private sector income lost to disruptions, i.e. unemployment benefits, i.e. extended unemployment benefits, i.e. direct subsidies to businesses and people, i.e. keep printing money, enhanced unemployment, other income transfers. So their 6% relies on governments printing money, which again, I'm not sure all of them are as inclined to do that as we have been recently. All right. This was our baseline case. If there was a Democratic sweep, they thought that here is how much more money would be spent. Here's their new projection with a divided government. So a smaller stimulus bill, if you will, a smaller COVID bill. So that's just kind of a picture to go with the words. Medical news has not been good on a nationwide basis over the last few months. As I pointed out on those those graphs that I look at on a daily basis on COVID, things are trending the right way in Wisconsin. So, that's positive. We kind of led on the way up, and we're kind of leading on the way down. Strong correlation across U.S. states between the change in new cases and the change in temperature since July. And you go, uh-oh, we're living in the wrong place for this graph. And you're right. As we look at this graph, and I'm actually going to get my cat toy back here. Give me a second. There we go. As temperatures got colder, more people inside, more people together, we see outbreaks. The strange part of this graph, and maybe you can explain it, this green line here is Canada. It looks like maybe it was warmer in Canada than the United States. I don't think it's all cold weather related. I think part of it is pandemic fatigue. Americans just don't have much of a tolerance for restrictions. Canadians may be a little more inclined to follow advice, perhaps. I'm going to skip that one. Vaccine to the rescue. Beyond U.S. fiscal boost and our expectation that the renewed European lockdowns will reduce virus spread, this reflects our continued optimism about a coronavirus vaccine. Obviously, this was written on November 7th, so nothing had been announced yet. Since November 7th, we've had 3 viable candidates. One that requires special cold distribution, two that do not. FDA looks likely to approve at least one safe and effective vaccine by January. Already, Moderna and Pfizer have applied for emergency use, which would be followed by rapid immunizations of high-risk groups. We've talked about that already. Got some things coming in the chat here. Canada has a lower population. Yes, it does. Kind of that urban-rural. The strange part is, so does South Dakota and North Dakota, right? And those are the ones who were absolutely off the charts for a while there. What are the thoughts on how increase in mental health issues, poor progress in education, et cetera, during the pandemic will affect the economy in years to come? I think there's going to be scarring. I am afraid that those students who were behind already have fallen further behind by 6 months in their education. And we're continuing to count. The sooner we can get them back to school, the better. But what kind of adaptations do we have to make going forward? Is 6th grade math still 6th grade math, or do we have to start at 5.5? Or do we push, over the next 12 months and try and accelerate their learning? Or are these kids that we're looking at just perpetually behind, which would be a shame? In terms of mental health issues, loneliness does weird things to people. God made us to be with each other and hug each other and be there for each other, and not having that, there is a lot of mental illness going around. Imagine if you're OCD in this environment, or if you're a germaphobe of some sort. Can you imagine the toll this is taking on you? Just horrible. Long-term impact, probably more on the kids than on the adults, in my estimation. Okay, here's this chart is very busy, but it's very interesting. So the question is to our super forecasters, who will remain anonymous because I couldn't find out who they were. But Goldman Sachs went and asked, when will enough doses of FDA-approved COVID-19 vaccine to inoculate 25 million be distributed in the United States? Back on April 25th, these super forecasters said, most of them said, not until October of 2021. And this kind of explains why the market has done what it has done in addition to the election. By September 25th, that number had gone from over 70% down to under 10%, that it would take that long. That is called optimism. That is called technological advances. That is why, more than likely, the market has had an upward bias and continued in that upward bias over the past, call it 6 months. All right. It's a fascinating chart, but a busy chart. All right. First available doses go to high risk, namely healthcare and other frontline workers, elderly, people, comorbidities. Those groups not only benefit most from immunity themselves, but their vaccination, at least in the case of frontline workers, also has the greatest positive impact on the broader population. You probably heard in the news the CDC is actually coming out with their rankings later this week. That's kind of why I asked you that question, just to see what your thoughts were. But we'll have a pecking order pretty soon. This is the way, National Association of Medicine and Goldman Sachs would rank them. Number 1, high-risk health workers, first responders. 1B, comorbid conditions, 2 or more of them, over 65 in crowded settings, i.e. nursing homes, retirement homes, apartments, etc. Phase 2 would be 1 comorbid condition like obesity and diabetes. Remaining, anyone over 65, K-12 teachers, essential workers like food production, cashiers, transportation. Someone asked about truck drivers, transportation, incarcerated, obviously high density population, and homeless. Phase 3, children, young adults, workers in important industries. These folks are probably more likely to go, yes, I will take the vaccine just because of the risk I take on a daily basis. Down here, probably not as likely, right? You may still have some, no doubt about it. Restaurant, hotel staff, maybe. Other, how about meatpacking plants? Probably. But you could end up with, say, 160, 170 million vaccinated and 130 who say it's not worth it. The risk is too low. Why would I do that? Question, any insight to age over 60 versus 65 due to mortality rates? I have no insights, I regret to inform you. I have seen no reliable statistics on any of the sites that I monitor that have that fine delineation between 60 and 65. What will the Great Reset going to do to the market? I think you've actually seen that, honestly, in terms of the Great Reset. If you're talking about the new normal, I think the market has fully priced that in at this point. The question in my mind is, does reality meet those expectations? And if it doesn't, that's when you're going to see a downturn in the markets. All right. As the population builds immunity to the virus in spring and summer, we expect economic activity to rebound sharply in depressed sectors such as travel, accommodation, and food services. So if you're Marcus Corporation, you are hoping and praying that you make it through till March, April of next year and can start the cash flow again. Same with air travel, although kind of think of this. We have kind of this chicken and egg problem. If you think about how are we going to distribute vaccine throughout our country and maybe the world for that matter, yes, there are freight distribution routes, but half of freight used to be carried on passenger jets, right? They'd fill the belly of that with freight, and you know, those passengers are subsidizing the freight transportation or vice versa. I don't know the mathematics on it, but it's complementary. Now, airlines have gone and slashed their routes and made them all kind of not predictable. At the same time that we need or will need that capacity to distribute a vaccine throughout the world, not to mention your Christmas packages and everything else that needs to be shipped in December. So that is a logistical challenge that we need to overcome on the distribution front. Is not only, you know, the one that needs to be the Pfizer, which needs to be kept at very cold temperatures, but also how do we get it there when we don't have nearly as many freight options as we used to? All right, GDP, I'm going to skip that one. So long-term scarring, they're fairly optimistic. Obviously in their summary, we think the news has been surprisingly good. If the health situation and aggregate demand follow our 2021 forecast, we expect most of the unemployed to return to work fairly quickly with limited long-term effects. The next chart kind of illustrates this. So this is the unemployment rate. You can see the giant spike and then the plummet. Dark blue is the US, light blue is Canada. But what percent of those unemployed are temporary? They expect to go back. They think this is just a short-term challenge. At the peak, it was about 80% thought, hey, this is just temporary. 20% thought this is permanent. 80. Right now that the unemployment rate is down to 7%, 6.9, roughly 30% think it's temporary. 70% of those unemployed, and that adds up being 4 or 5% thinks it's permanent. Strangely enough, you know, you look at a 4 or 5% unemployment rate, that's not bad if these employees are right and it truly is temporary. The other interesting aspect for what I'm calling the world's shortest recession, business sector has also coped with downturn better than many commentators had expected. Our preliminary takeaway is that pandemic recession has not only caused less scarring than widely anticipated, but might actually have jolted the economy's dynamism to some degree. What does that mean? That means when consumers are forced to change their habits, there are opportunities for new companies to serve those new habits. How about Zoom, for example? How about all of these food delivery, the DoorDash, Postmates, Uber Eats? There's opportunity to be had when consumers are forced to change their habits. Keep in mind, what is advertising trying to make you do? It's trying to get you to change your habits, right? Now you were forced to, and that's an opportunity for businesses to meet your new needs. Just looking at bankruptcies, 2008 compared to 2020. If 100 is normal, how did things play out over the course of the year? So this is the December previous. You can see bankruptcy started to accelerate 4 to 5 months into the year, and then really took off toward the end of the year. In 2008, 2020, bankruptcies have actually gone down. And a lot of that can be attributed to the Paycheck Protection Program, the PPP. I know it's gotten some bad press because there are some non-businesses that raked in hundreds of thousands of dollars, but it also did a lot of good in terms of allowing businesses to pay employees, stay in business, even when their revenues absolutely disappeared. And if we look at new business activity, businesses created, if we look at France, we have the US here. Relative to December of 2019, we saw a struggle and then take off in terms of new businesses. Monetary policy. If this pickup, so that's talking about this pent-up demand. If this pickup in economic activity coincides with a sharp rebound, it could lead bond market participants to worry about an earlier than expected exit from the current expansionary policy stance, i.e. higher interest rates, which would cause bond values to decline. The underlying inflation reality looks fairly benign. We've talked about that already. We have plenty of slack in unemployment at this point. However, if all of this pent-up demand comes to fruition, that unemployment rate should go down fairly quickly, which should actually accelerate that process because people who are employed tend to spend more money. Inflation subdued, they don't expect a Fed to raise rates until early 2025. You talk about making predictions that are out there a piece. I'm not sure I would predict that, but that's their thought. Lower for longer. Low inflation, here is what they expect in other countries too. They really don't expect anybody to raise their rates at all until 2025. Very accommodating economic policy. That's tailwind for stock market. That is tailwind for more credit sensitive bonds. That is lifeblood that is flowing through into the economy. Touching on emerging markets, Corona crisis hit emerging world in very different ways. The chart says this best in terms of what's the virus hit. You look at countries that kept things relatively under control versus those that did not. And interesting, I know there are islands in here, so that kind of argues against my island theory, but it has to be island and good management, maybe. But you can see India, Philippines, Thailand, Indonesia going to take probably a 12% hit to GDP. Those that did a better job, 2 to 4% hit to GDP. All right, we're reaching the end, and I just realized I'm 9 minutes over. I am a chatty Cathy today. I'm going to have to tidy this up. China, probably the bright spot. As we've discussed, the virus is really under control there at this point, and they are also highly stimulating their economy, focusing on interior demand, interior consumer demand. So that could be a bright spot. Although, interestingly, Goldman Sachs is a little less optimistic on China, thinking that they're going to start reeling things in. We have talked about the dollar already, so I'm going to comment on the chat line. Don't believe any stats from China. Here. Where was the USA on that global GDP chart? It isn't. It was focusing on US. or I'm sorry, it was focusing on emerging markets. So US is not included in that. Where would it be? We would have, we'd be in the 4 to 6 range. So kind of in the middle. We've talked about the dollar. Probably even in a negative scenario where things don't work out, another plunge in par with March, April is highly unlikely. So they view the progress that we've made thus far as sufficient to sustain the markets going forward. The world has adapted to the risk of bad outbreaks via hygiene measures such as face masks that allow large parts of the economy, especially manufacturing and construction, to stay open. So in March, it was shut it all down. We eventually reached the conclusion that is not good. We still need to have economic activity. So how do we do that without spread? All right. That is the end of this report. So notice what was not in here. It's not the S&P is going to be at 5,000 at the end. What you see, though, is very positive, very optimistic look toward 2021, assuming a few things. Assuming, number one, vaccine is effective and distributed on a wide basis. 2, creating consumer confidence and people are no longer scared to participate in the economy. If it doesn't unfold like that, 2021 is going to be a giant disappointment to you. All right. With that, I see that since I'm over time, my participants are down to 37. So you are the survivors. Thank you very much for lending me another 12 minutes of your life. Again, if you want to see what we're thinking on a weekly basis, make sure you read the blog that we post to our website or send out via email or Facebook or Twitter every Wednesday morning. This morning's tomorrow's blog will be on changes to required minimum distributions that are coming. So some of you will be looking forward to that. Again, if you have any ideas for what you would like to talk about in our, Lord willing, in-person Power Breaks next March, please just send it on the chat or send me an email, and I will make sure to have that in the mix for consideration. We try not to pick these topics until like a month before because we have to get everything through compliance. But send stuff to me. If there's things you want to learn about, I love to learn too. Let's learn together. With that, I'm going to let you go to pursue the rest of your day. Thank you so much for joining me. Do have a blessed Christmas, and Lord willing, we will see you in the new year. Take care now. Bye now.